Do you want to get started with investing but think it's complicated, time consuming, and don't really know where to start? Well, then keep on watching. Hi everyone, my name is Francesca and here I talk about personal finance, investing, business, career and all that jazz. So today I wanted to talk to you about something super interesting, and if you're new to my channel, maybe you haven't seen any other videos that I've done on Vanguard and investing for beginners, but the Vanguard LifeStrategy may be the most effective way for beginner investors to get exposure to many different market regions and types of assets without having to do the screening work. So how does this work exactly? First of all, Vanguard LifeStrategy funds are one decision funds. So that means that you choose one and that's it. You don't need to build your own portfolio because these one decision funds, they're already made of different index funds or ETFs that cover different aspects or geographies or markets, etc. And they are designed to give you broad exposure to different markets, different types of assets also, so bonds and equities, without you having to do the work. So it sounds great, right? Because you get all the benefits with none of the headaches, basically. So this is the preamble, let's say. For those of you who don't know Vanguard, actually, to take a step back. So Vanguard is an asset manager firm specialized on kind of personal investment strategies and personal finance for retail investors. They have created they have your average your normal stock and shares ISA. They have individual index funds, and they have also retirement funds. But now here today we're going to focus on the LifeStrategy funds. So to get a bit more specific about them and what they are, the range of LifeStrategy funds, they combine multiple individual index funds into a one fund portfolio. So it's basically a fund of funds that gives the investor access to literally thousands of shares and bonds in one single investment. So this helps reduce the risk by spreading your investment. And as we know, diversification is key when it comes to investing. Like not putting all your eggs in one basket, but rather diversifying and spreading them across a variety of assets, types of investment vehicles, etc. So how the LifeStrategy funds work is basically everyone has a different mix of shares, or called also equities and bonds. So as we know, shares are typically riskier, but they tend to give you a higher return over the long run, whereas bonds are more stable, but they also offer lower potential returns. So for the average investor and for the majority of cases, having a mix of both will help kind of balance actually risks and rewards. So Vanguard has different types of strategy funds, and actually here I'm going to be sharing my screen so that you can see that they have different types of LifeStrategy funds. They're called either LifeStrategy 20, 40, 60, 80 and 100, depending on allocation of equities in the fund. So LifeStrategy 20 will have 20% shares, 80% bonds, and so on. And so as Vanguard says here, you can see the lower risks one and lower reward ones are better suited for the short term. So they say 3 to 5 years, whereas the more the higher risk you go with the all the way up to with the LifeStrategy 100 fund, they advise you to dedicate this just for the longer term goals, so 10 plus years. Of course, how do you decide which one is right for you? Well, there are a few things to consider, right, when you're making your decision. And again, it is a one decision fund, so this is literally the only decision that you need to make. So I would encourage you to take your time and really ponder, understand what is best for you and what you'll be more comfortable with, because ideally this is a decision that you're going to be sticking with for the long term. There's still going to be ups and downs, so you need to be able to keep at it and not just be tempted to sell all your shares and abandon it. So once you make your decision, be convinced, be comfortable, and then proceed. And what can help you make your decision is considering what your risk appetite is. So meaning, how comfortable would you be with taking higher risk. So as we said, shares offer higher potential returns than bonds, but they are riskier. So if you're more cautious of an investor, you might want to choose a more conservative, life strategy. So life strategy 40, for example, with less shares and more bonds, whereas a more adventurous investor or someone that has been a bit more experienced, right, is not the first time that they're investing, they might want to go with a life strategy 80 or even 100, which is my personal choice. And then another thing that can help you understand which one is best for you is how long are you planning to invest for, right? So if we talk about again the horizon that we're working with, if you know that you're going to be needing that money in say 3 to 5 years, then definitely stick more to more conservative life strategy funds. So a life strategy 20 or 40 could be better for you. And again, another thing to consider is see your age, right? Because it's someone's attitude towards risk and also risk tolerance and ability to weather ups and downs in the market will highly depend on their age as well, right? So a 25-year-old will have a very different risk tolerance as opposed to a 65-year-old, right? Who will want to rather stick with more conservative and bond-heavy types of investments. Now, just to give you an insight into what I've decided to do, something that I really like about Vanguard is that they allow you to see exactly what the holdings of their life strategy funds are, so that you can take them as inspiration and then use maybe some of those ETFs or index funds that they use, incorporate them into your own portfolio of investments, so that it leaves you a bit more freedom to maybe also choose different providers, because of course if you use the Vanguard platform, you're only going to have access to Vanguard ETFs and Vanguard index funds, which they do have a huge variety of them, but of course there are other providers out there as well, so like the iShares one of Blackstone, Invesco, MSCI, and other ones as well. So that, for example, I've done is I went into, and I'm going to be sharing my screen again here because I want to show you. So if you see, we are back here at the life strategies. So what I've done is let's say life strategy 100, so we click on it and it will show us the different kind of details about it, the NAV price, asset allocation, and it's, as you can see, 100% equity. Ongoing charge, which tends to be for everyone, is 0.22%, which is quite low, so we like that. And again, risk profile is 5 out of 7, 7 being the most risky one out there. Now, what we want to do is we want to go into portfolio data, and it shows you exactly the allocation to underlying Vanguard funds. And so it shows you all the different indexes and ETFs that they are invested in with the percentages as well. Now you can see majority, biggest one is US Equity Index Fund, FTSE All Share Index, Unity Trust, Developed World ex-UK, etc., etc. And you can see how heavily weighted they are in the overall fund. And what I have done is I have used these and I have looked them up into Trading 212, which is my brokerage of choice. And I have then gone ahead and selected some other ones as well. So similar ones most of the time, but also other ones. So you can see this is my own kind of spreadsheet that I've made. And you can see I've modeled that on the LifeStrategy 100 fund, but I've then made some changes. So for example, I've chosen the iShares Core S&P 500 ETF to go and replace the Vanguard S&P 500 ETF, just because I thought it had a better price, honestly. And then as you can see, I have some other ones. So I've got a FTSE All World ETF, I've got a Core MSCI World, I've got Developed Europe, S&P 500, also I've got the VUSA, so the Vanguard one, but a smaller percentage. And then I've added a few different ones. So the Clean Energy one, which I really like, and I really think it's an important one to be invested in. And by the way, it's been doing fantastically in the last few months. So very, very happy that I added that. I've added an information technology one, etc., which you can see they are not included in the LifeStrategy 100 fund. Now, you don't have to. Again, the beauty of these LifeStrategy funds is that if you want to, you can literally just invest in those. They are re-weighted and updated daily. So to make sure that all your allocations and your assets stay as at the the chosen percentages, and you can set up a direct debit in the kind of set it and forget it type of investment, and you will likely do a lot better than the majority of active investors that are trying to beat the market. So this is not something that you have to do, like this added step of looking up the holdings and finding equivalents in another brokerage account, and then create your portfolio. You are absolutely well set if you just wanted to use Vanguard and do all of that through them. But just to show you that if you wanted to be a bit more advanced with it, you can still use, for example, LifeStrategy 100 as a template, right, as a starting point, and then tweak it and make it your own. So hopefully you have got a better understanding now of Vanguard and their LifeStrategy funds, and I would definitely encourage you, if you're a first-time investor, to consider them, because I do think that they make investing very easy, simple, and even boring, which is something that you want, as I said, for a long-term strategy to financial wealth. And with that being said, I will see you in the next video. Bye.